AIM-listed Totally PLC delivers planned, urgent and insourcing healthcare across the UK and Ireland. It's seen its shares rise more than 120% earlier this year from the lows to the highs, and has today reported a 265% uplift in full-year EBITDA on a 35.8% rise in revenues for the full year. It's also recommending it pays a maiden full-year dividend, subject to board approval, of course. The year ended 31st of March. Was the end of the full year. So right in the thick of the pandemic, Bob Holt is joining us now. He's chairman of Totally PLC. Bob, it's good to talk to you. Congratulations, first of all, on these numbers. Let's take a look at what it is that's generated this sort of move in both revenue and the EBITDA rise. What is it that's driven your results?
Well, a number of reasons. We have been for the last 3 years consolidating the urgent care market, working for the NHS. We bought a business earlier in the financial year as well called Greenbrook, which we consolidated with our existing provider, Vocare. So that's been a major impact in terms of where we've got to. So I think from where we are, these are a set of results that we've been anticipating. They're in line with market expectations. We had excellent cash generation as well. So, just a continuation where we started this buy and build strategy.
Cash up 19% to 8.9 million. What is it that you're going to be doing with that? I understand, as I said, you'll be paying a maiden dividend. Does that account for much of the cash, or what are we talking about in terms of what the company's got in its balance sheet to do with in the next year?
Well, the cash impact of dividend is minimal. It's only £500,000, so it's not really going to eat too much of the cash. But we have very few commitments other than ongoing business interests. So we've got no earnouts in terms of coming into of any effect. So the idea is here that we invest back into the service we're providing and look at grow the existing businesses.
One of the things that I think that perhaps possibly maybe investors have picked up on is the fact that you haven't really given much forward guidance. Investors do like some transparency, some accountability, and some reckoning on where the company is going. What is it that you're holding back on? What would you like to say to investors about the outlook for the company? Clearly, as I said, you reported these numbers right in the thick of the pandemic, and we'll talk a little bit about how you've emerged in this year. But what about the outlook?
Well, the outlook's very good. The issue was here that there are three aspects to the business. One, which is by way above 90% of the group's revenues come from urgent care, fixed contracts in place, no problems at all. The other two, where we got planned care went on hold during the coronavirus. So anything which was elective surgery of small amounts that we do, dermatology services, all these through GP practices were basically put on hold. As you know, people were advised not to go to your GP or not to turn up at AA unless you had a particular major reason to go there. So parts of the business, smaller parts of the business, have been totally put on hold, as has our insourcing business, which is a fantastic model in terms of taking people off waiting lists, but they're on hold. So until they come off hold, which of course we're anticipating now, as we're hopefully coming out of COVID and hopefully not too much of a spike, we would hope to put some market indications of short-term profitability into the market as soon as we get a normality of orders replaced back by the NHS. But look, it would be irresponsible of us to put a forecast into the market when the NHS, which is under strain, clearly they're not going to go out and order and issue new orders for and contracts for work that's non-urgent. So we would hope that returns to normal pretty quickly, and as soon as that does, we'll put a forecast out in the market.
Yeah, what about staff, the payroll, and what's been happening over the last 4 months or so? Have you furloughed any staff at all? What's been the position about the employment?
No, we haven't.
Right.
And clearly, we've been very busy, as the NHS has been very busy, and the NHS has been very keen to help us support them through some of the difficult times they've been having. So no, hardly any furlough. And clearly working very, very, very hard.
Yeah, what about working from home? I'm asking that question purely because I'm interested to know what boards are doing around the country with their companies now, because a lot of them are reassessing the need for as much office space as they had going into this pandemic. It's really focused many minds on trying to find new ways, and possibly as well, let's face it, reductions possibly in costs for office space. Is that something you're now considering? Are you encouraged by what people have been able to do at home in terms of their workload?
Yeah, to be clear, very few of our people work from an office. The large majority of our people work in a hospital setting. So all the urgent care centres are based within A&E departments in hospitals. So in the large majority, over 80% of our people work directly in a hospital environment. So clearly, no aspect of that. Those who work in an office, yes, of course, we have people working from home, admin and support staff. And in reality, we will consider whether that's right and that's where they should be working in future. And that would be sensible for all parties. I think, look, lots of companies have had a good opportunity to look at their workforce levels. We don't necessarily have to look at whether we reduce those, because we're very busy. But yes, it's a good opportunity to look at people where they should work and how effective they can work.
Yeah, I want to pick up on an interesting announcement that was made, and in fact involving yourself back in May, and you took it upon yourself as chairman of the company to write to every shareholder that held 100 shares or fewer, to ask them whether they'd be willing to sell their shares to you as an individual investor.
Yeah.
I know you own about, I think, 0.71% of the company at the moment. What is the aim of this? What's your end game in terms of trying to mop up these smaller shareholders if they want to sell?
Well, firstly, the only intention here is to reduce the cost of burden on the company of servicing shareholders. Clearly, we send out 2 sets of accounts a year plus any announcements. If you've got 100 shares and the share price is 20p, then as you can imagine, 20 quid is wiped out in 1 year by just servicing those shareholders. So it's ironically, it's in shareholders' best interest not to hold a few shares. Clearly, people want to, and that's fine, and we're very happy to support those. So I stood in the market. This is, I think, the third time I've done this. Is to say, look, if you're not interested in retaining shares, and to sell 20 quid of the shares in through your broker would the trading fees would wipe out anything you get for them anyway. So I'm happy to buy them off you at market value, and I will just increase my holding, and I'll continue to do that throughout the future. My family, I've got 5 kids, so my family and I own substantially more than what the figure you quoted, because they're all quite big holders in their own right through their pension schemes. So I will buy the shares. It's only one intention, and it's to do just that, is to reduce the burden on the company. And if anybody wants to sell them, all they need to do is just respond to the company. It's all done through the company secretary, and he just writes checks out on my behalf, and off we go.
Yeah. Okay, let's work out where the company's going then from here on in. As I said, the turn of the year was 31st of March to 1st of April. We've spoken a little bit about how busy you've been since then. What are you going to do? You're going to carry on doing what you did last year. You made an acquisition, you expanded the company, you did all sorts of major strategic moves last year. It was a really good year in terms of some of the developments I know you undertook. What is it that you set up for this year?
Well, when I took control of this, what was a very small listed company at the time, we brought a buy and build strategy into providing out of hospital support services into the NHS, and we are committed to do that. Wendy Lawrence, who heads the company up, has a great team of people. We are well managed. We have great levels of care provided by Gloria Cook and her team. So we'll continue to do that. We can, of course, now start looking again at acquisitions. Share price, as you quite rightly said, has performed well in the last 12 months. Sadly, the reaction today, I think, by us saying that we're not going to give market indications, that's, I think, been misunderstood by certain people. Clearly, we're very committed to short, medium, and long term in this business, so we're very comfortable with that. But clearly, people have seen today that by doing that, that's uncertainty. Well, that's fine. That's people have that. So we're going to carry on what we're doing. We will look at acquisition opportunities. We will return to a buy and build strategy as and when we feel it's appropriate. We will only look at adding services into this which adds substantial value. The three core businesses I mentioned about urgent care, market leader in the provision of these into the NHS, our insourcing model, which takes out people off the waiting list, providing minor operations, will go through exponential growth over the next 3 to 5 years, we believe. So that's a big area for us. We're maximising it. It only started during the year. We grew it organically by recruiting somebody who is well known in the sector. So we got very high hopes of that, and we hope that for the Blanca to increase as well. So a lot more of what we've been doing. Clearly consolidating profitable cash generative work, and then come and look at what else we want to do.
Lovely. Look, Bob, it's been a pleasure. Thanks indeed for your time. I appreciate you're a very busy man, and of course on this day as well, having released those fully numbers. But thank you so much indeed for joining us and giving us an update on what's happening at Totally PLC. That was Bob Holt. He's the chairman of the company, and this is after the business reported EBITDA up 265% for the full year on revenues, an increase of 35.8%.